Hi, this is Daryl, and I'm going to record a video here about something I was talking about in this morning's meeting, and that is the 10-30 crossover, both of those being EMAs, so it's a 10 EMA and the 30 EMA. So we have the euro here, which is the only thing I'm trading at the time. This is a crossover right here. And I also have an arrow on here which gives me alerts so I can wake up to take the trade. Anyways, this blue square right here denotes the beginning of the European session. And during this session, I'm probably sleeping. This right here is about 5 o'clock in the morning Central Standard Time. So I'm usually not up at that time. This is 6 o'clock Central Standard Time, and I'm usually up by here. And this is also around London lunchtime, this area right in here. So the market generally is a bit more subdued at this time. So here's how we handle this. Besides the 1030 EMAs, now at the bottom here I'm using the what is the name of this thing? Accelerator oscillator. And the accelerator oscillator is something like a MACD, and it also gives you color bar changes so that you can see the difference between price moving up or down, no matter whether you're above or below the zero line. So I like that feature. I've added other lines on here to denote areas where there's extreme movement. The first line is usually first to the second line is usually an area that price will usually peak out at. Anything above the second line is pretty strong move. But remember, any oscillator is all relative to the previous bars in the chart. Like this move here to here, this is 25 pips, but on here it looks like an extremely strong move, which compared to right over here, where it did move substantially higher, but then this move from, say, this low up to here is almost 75 pips, so it's about 3 times as much. So this is always going to be relative down here. This down here is always going to be relative to the previous bars on the chart, the previous 10, 20 bars or so before that. Okay, so let's get on with how this thing works here. Now, what we're doing is we're trading crossovers when the 10 crosses the 30. Now, here the 10 is crossing the 30, so that signals us to be alerted for a trade. Now, I would never, well, probably never ever get into a trade the first time, the first bar that goes below here, simply because there's almost always going to be a pullback. And also, when any bar that's a subject bar, I'm also looking at the depth of the accelerator oscillator, which in this case goes to the extreme level of 0005. So that's more than double the first line, and about 70% more than the second line. That's pretty extreme. So I would never take a short when something was this low. But now there's a pullback here, and the pullback is this bar right here, and it gets, let me see, the highest bar is 82.6. The 10 EMA at this point is 83.9. So that's a little more than a pip below the line. And typically with the euro, I want to use a return or retrace that gets within 1 pip of the 10. So this one I may or may not have taken. It just kind of depends. Also, the 10 is moving until this 5-minute bar stops. By the way, this is a 5-minute chart on the euro. So at the time when it got up here, it was still more than a pip away because this 10 was a little bit higher. So that's a little bit subjective whether or not you would want to get in here. Say, had you got in the pullback somewhere around in here, it did go down 10 pips less the spread, excuse me, about 9, which is not bad. And you could have at least got yourself to break even at that point. Not an ideal trade at this point because it did drop down so far down here on the oscillator, but that's an idea of a trade you might consider taking. Not the best example, as I mentioned. Over here, the next crossover we have is right here, and on this one we are let's see, our accelerator oscillator has a reading of 2.5, okay, and we're waiting for a pullback within a pip or so of the 10. So on this one right here, the low of this bar is 86.1 and the 10 is 84.7. Now this bar ended up higher, 86, let me see, 86.1, 84.7. Yeah, so this one, this bar right here would have been within 1 pip of the 10 at one point, because as it moved back up, it's pulling the 10. Oh, maybe I'm going backwards here, aren't I? So you may, once again, you may or may not have gotten in here, depending. And also, the bar before this one is 3. The initial bar was 2.5. This one was 3.1. So actually, this one would have not been a valid trade, because if you're using the awesome oscillator in here, your initial bar across was 25. The next one was 31, and this one was 29. So they're all about even. And I like to see a pullback not only on price but on the oscillator as well. So this one probably would not have been a trade either. Once again, it would have been a subjective thing. And as we can see here, even had you got in, say, somewhere right in here, price goes up about 9 pips and maybe 7 with the spread, and then comes back down here, and that would have been about a -9 with the spread. Now, had you stayed in, of course, it went way up there, but that's where the subjectivity comes into this. I mean, you can also look at it like, let's see, well, we don't have another crossover going back down. We do have a little trend line here, which I didn't set up yet. Blue is the wrong color, I believe. And no ray. Okay. There we go. So you could have, I suppose, done something like this, particularly once you saw that there was no crossover and we started going back up. So maybe getting in here, or maybe at the top of this one, there's a possibility. But neither one of these are the standard trade that I'm looking for on this one. So actually on this day, I probably would not have gotten a standard trade out of this. And so we move on to, say, another day. Now here we have more of this going on. Well, obviously that goes on every day. But here we have another 4-6 crossover. The arrow is off by 1. Crossover actually occurs on this red bar right here. So now in this case, we do have a nice pullback. On the crossover bar, by the way, our reading was 6.7, or actually 67. I'm leaving the first 3 zeros out. The numbers are over here on right here. I'm leaving the first 3 zeros out, so this is a 67, which is a very high extreme, but it comes right back down to the 10, and this reading is 62. That's still pretty high, but we had some big bars in here. So a choice here again, but with a pullback like this following some pretty extreme bars as far as the move up, I probably would have been tempted to get in here and say getting in here about 1 pip above this moving average. It moved up a nice 23 pips, so 20 pips with the spread. So there's room in there to get some profit, however you want to look at it. And then it comes back down here. Interesting thing here too, you might want to note, which also happened on another one, that you had a big return back down here, but then it popped back up without crossing over. So you might want to incorporate something like the first bar to close, and there's some data missing. That's why we have this gap here. So the first bar to close back above the 10 could possibly be an entry. And let's say that entry might have been right here. Another 12, 15 pips, 12, 14 pips in the offing there, which could have been had. And remembering this right in here, this area, let me go back to that previous day where we had no real clear entry. The same thing happened right here. Let me get this out of the way. You can see where we did have the move above. Yeah, let's do it like this. We did have the move above, and then price came back down and made this hook down in the bottom, and but it didn't cross over, and then came and closed back above right here. Well, you could have maybe used this for an entry if you were being aggressive, because this bar closed above. It would have taken, let's see, it's 5 pips with the spread. It would have taken a 7 pip stop to keep that one in. And had you gotten in there, that would have been one sweet move. 40 pips up to the top. Okay, I digress though. Let me get back to what we were looking at here. Okay, so there's this trade, this one. Now, coming back down, the arrow should actually be 1 bar over on this one. Let's see, we have an oscillator reading of 47. We get a great pullback here right to the line. So, and with an entry right back into here, price goes against you about 3.5 with the spread, maybe 5.5 pips at the most, and then moves down about 18. So that's plenty of room there for some profit, or however you choose to take your money out. Another move here, and this one, let's see, the actual crossover I believe is on this one. Actually no, it doesn't cross over until this one right here as far as the actual 10, but this is perfect because it peaks, comes back to the line for you. You get right down around here someplace and take it up. And this moves about 15 pips also, so about a 13 pip move, counting the spread. And then another move down here, which let's say we get in right here. Excuse me, not right here, but the crossover is right here. It comes right back down to the line, or you're right back up to the 10. From the 10, we want to go, we want to sell. Okay, so if we're selling on this one, we're going to get skunked out right about here. So this is 5.5 plus a spread, so maybe 7 plus pip loss. And let's say that we decide to get back in here long, which would be on a return to the 10, which is right here. Then we would be going long here, negative 7 pips, because now we're moving the other way. But then once we get this return on this bar back up to here, now we're selling from this point, and it drops down 17. So there's room there to make up for both of the losses that we occurred over here and here. So this would be a pretty typical day. You'd have, let's see, a couple of 1, 2, 3, 4 wins and 2 losses, with the wins all being at least about 12 pips and the losses being 7 each. So this would be a good example of how you can trade this, and I'll be doing more on Monday when we meet. And so this is Daryl signing off for now. I hope this gave you some ideas, and fire me any questions that you would.